Okay, our next speaker, Dr. Mervyn Maistry, is an early investor and board member of Cyberian Mine. Cyberian Mine was established in early 2018, and the company is a Berlin-based startup which runs miners for beginners and also professionals using cheap, clean Cyberian hydropower. And Cyberian Mine is committed to mining cryptocurrency without burning fossil fuel. Through 2 successful fundraising rounds, Cyberian Mine has added experienced mining engineers and board members to their roster. Now let's welcome Dr. Maistry. Thank you very much for coming.
Good afternoon. Thank you very much for that introduction. So as you probably heard, I'm a shareholder of Cyberian Mine. And what I will talk to you today about is put that together with a mining fund, which we are currently thinking of launching, for which we've already got the preliminary approval. And the idea behind that basically is, how do we take mining into the institutions? But maybe just before that, what I will do is give you an idea about Kintaro Capital. So Kintaro Capital has taken the stake in Cyberian Mine. Kintaro Capital is it's based in Berlin as well. It's a wholly owned venture of Confidio GmbH. We have two types of businesses. One side of the business we have is purely in blockchain, looking at blockchain ventures and blockchain in the industry. And on the other side, we have the cryptocurrency ventures, which is basically around mining, around Bitcoin, around the other coins as well. And these two are actually quite complementary, but they generally kept apart within the company. And you'll see in there that we have the strategic partnership and the shareholding in Cyberian Mine under the cryptocurrency services. Now, what's important about what we're doing is we already have a cryptocurrency fund in Malta. It actually was one of the first EU licensed funds, which means it offers full investor protection. And the good thing about the mining fund is that the mining fund will use exactly the same infrastructure that has already been approved by the Financial Services Authority. We have a number of very experienced people in investments generally, investments across equities, investments across hedge funds, and we have a KYC AML expert, who's Alexia Ferrugia at the bottom. And what all of this means is that when we start a mining fund, we will start it with fairly experienced people. No offense against anyone under 30 in the room, but as you'll see on our board, there is no one under 30. Part of that is because we think that the risk has got to be managed by people who understand risk, who've been through 83, who've been through 2003, who've been through 2008, who really understand downturns and upturns if we're going to manage investors' money properly. We have an advisory team of compliance and legal guys to advise us about what is legal and what is across the EU. Now, why is all of that important? Because at the moment, in the equity markets, we've got about $60 trillion in investment. In the bond markets, we've got 100 trillion. Yeah? And if you compare the 250 million that we've got in Bitcoin, or 250 billion in Bitcoin and other currencies, this is like a tiny little drop in the ocean of assets. Yeah? And if Bitcoin and the other cryptocurrencies, as well as mining and the associated industries, are going to become huge, if we're going to start attracting the hundreds of millions at a time in investment, yeah, then we need to provide institutional investors with a fairly clear framework of how they develop, and a fairly clear business case of why they should be doing it. Now, currently, we've come through the digitalization of data era. yeah, which gave us Google. We've come through the connecting consumers, which gave us Amazon, Facebook, Spotify. And where mining and where cryptocurrencies, this is our investment thesis, where it's going to come in handy is that in future we're going to have machines transacting with machines. Yeah? And that's where the future of commerce is going. And for that, we're going to need a fairly secure way of managing these transactions. And cryptocurrencies like Bitcoin and mining, obviously as a security layer behind it, provides the economy with that. So we think that by the value of the decentralized future by 2030 is going to be huge. Yeah. We already know that a lot of the analysts, Goldman Sachs, JP Morgan, Gartner, Forrester, have all said that roughly by 2030, we're going to have about 3 trillion flowing through the blockchain. Yeah? This 3 trillion needs to be secured somehow. Yeah? And that's where mining comes in, that's where proof of stake comes in, etc. My analysts at Kintaro have come up with a much more dramatic figure. We think by 2030 it's going to be closer to 25 trillion. Yeah. And for that, the big part of that is looking at the fact that today's stock markets are 60 trillion and bond markets are 100 trillion. So 25 trillion in the global scheme of things is actually not too large. So if we're going to do that, we need to have a way to attract institutional investor, not retail investor money, people trying to make $1 million here and there. How are people going to, when we're talking about institutional money, we're talking in about generally 50, 100, 200, 250 million. And for that, we need to look at the structure of the financial industry at the moment. And for that, we have chosen a PIF. A PIF is a professional investment fund, and it's used to collectively make an investment. Part of that is also a number of retail investors can come together to invest. Yeah. It means that the ownership remains very clear. Each investor retains ownership and they share units. There's a broader investment opportunity. You have greater management expertise. You have greater investment management expertise. You also have lower operational risks. Yeah. And for this reason, it actually then becomes easier for institutional investors to make money. It's also a way for larger retail investors to invest in mining without the hassle. And importantly as well, we need the underlying research and algorithmic capability. Yeah? So we have higher liquidity. We deleverage the operational risks of retail mining. We can diversify investments at any stage by mining different coins. Because most investors obviously are thinking about what are the risks of Bitcoin, and if Bitcoin does have some hiccup 2 or 3 years down the line, how quickly can they repurpose their investment? And so we offer that as well. Yeah. Why green mining? So I think when I was introduced, I think one of the key investment theses we have is how do we make sure that even though we are pro-Bitcoin and pro-investment in mining, how do we make sure that this does not have an impact on the environment? Yeah? And so we're based in Berlin, and those of you who are part of the Fridays for Futures will know that Berlin is a very green city. Yeah? And I think that this movement will carry on in the rest of the world. Currently, the global carbon emissions are reaching 40. I don't think that we want Bitcoin to be associated with dirty energy. And this is not just a political thing, it's also economic. Because if investors start moving away from Bitcoin mining because of the dirty carbon emissions, it delays adoption. If it delays adoption, it delays my investment return. Yeah? And it delays all of your investment return, because the investment returns in Bitcoin and Bitcoin mining are predicated on this industry becoming large. So that's part of the reason we've decided, and our investment base is predominantly German, and so environmental concerns rank quite highly. Institutional investors are also concerned about environmental concerns, and so it's unlikely that they will choose a non-green investment when they can choose exactly the same thing that's a green investment. Our investment hypothesis is that the input costs for hosting are quite varied. You need trade agreements between partners, you need logistics agreements, you need to prepare facilities for installation, you need power supplies, you need trained personnel, you need to be concerned about the cost of electricity, maintenance and mining, installation of the machines themselves, the quality assurance, compliance checks, and then the cost of accounting. Now, why do I go through all of this? Because I think anyone can set up a mining fund really quickly. I think there's enough in the market where you can go and do something in really gray area and make some money. Yeah? This is not a sustainable long-term solution. And we are looking at how to make mining as an industry, and for ourselves to make a profitable company, make it long-term sustainable. And in a mining fund, what you can do is you can bring all of this together and with this economy of scale, lower your input costs. Now, why do we want to lower our input costs? Because it increases our return on investment. Yeah. So returns for a retail investor, so this is actually, my analyst took my own Bitcoin mining machines here. And you can see that basically you get the return of 142% in 9 months. It's slightly different now with the hash rate going up. But if you look at that as an institutional investor, where you, instead of investing 100,000, you invest 10 million, your revenue is higher, your operational expenses are significantly lower, and your net is higher, and you still have the full cost of your investment. So it's fairly low risk as an institutional investor. And just as a side note, when I designed this fund and the investment thesis about the fund, I thought about what investment vehicle can I design that is low risk enough that my mother, who's 78, can actually invest in it, and I can be comfortable that she's invested in it. Yeah. And so that's the thesis behind it. And so the investment risk is relatively low, but you have full exposure to the upside. So it's attractive returns, low risk, limited downside, but full exposure to a bull run. And these are quite important, of course, if you're just watching the bottom line. Yeah. The lower risk, I think, also comes from the fact that it is fully licensed by a financial services authority in Europe. We have got an auditor. PwC is the auditor. It's taken us about 8 months to convince them around all of the issues around mining, which we've done. And we've got an administrative partner, which is FexServe. Hash rate analysis. I think this is very important to explain to investors why Bitcoin is actually a safe investment. Because the higher the hash rate, the more secure the transactions. And of course, Bitcoin has got the highest hash rate at the moment. Ether comes next. Monero and Zcash, which is also two of the hypotheses of the coins that could move in the next 3 or 4 years. We're looking at as well, Monero's got a problem because they refresh every 6 months. But I think with this, you can make investors completely comfortable with the hash rate in Bitcoin. We've managed the risk exposure. So, for example, we have made sure, I was in Siberia with the CEO of Cyberian. We signed an agreement with the government. We've got a direct agreement with the power supplier. So there are no intermediaries. It's always interesting for me how blockchain is meant to be has meant to cut out all intermediaries, but everywhere you go, there are about 5 or 6 intermediaries between. So we have really cut out all the intermediaries. Yeah, we're going directly to the source. And then environmental factors. I think this is a very important part of why we chose Siberia, why we're looking at Sweden, why we're looking at Norway, is because of the surplus renewable energy. And that's very important, not just renewable energy, the surplus renewable energy, because renewable energy that is not surplus presents a medium-term risk to the investor. And then we've got some operational risks, and I think some of you have been to the desk that we've got with the solution around immersion heating, where we actually can increase the hash rate and make sure that we don't have the hazardous conditions. So we've got basically 3 elements for a stable solution. We've got Siberia, and we're looking at others with the same sort of risk exposure. It's green. The thing about Siberia as well, which I'll come to a little bit later, is that we've got Soviet-built hydroelectric plants. with surplus, that word again, surplus renewable energy. Low-cost energy, cheap facility costs. So also low-cost labor costs are important. And that's low-cost labor costs as well as an input of expertise. So in Siberia, you've got a lot of mathematicians, a lot of engineers. So we know that the operational costs can be stable, kept stable in the long term. And then natural cooling. I mentioned the agreement with the Siberian government, and then the strategic partnership with Cyberian Mine. Ethical, customer-friendly partner. We've got a fairly streamlined sourcing and operations, including logistics, not inconsequential. Contracts and reconciliation at the moment are currently being developed on the blockchain. We've got mining expertise where we've been mining with ASIC since 2014. Local knowledge, that's also very important. Two of the co-founders actually come from the region and have extensive business contacts there, and the ability to scale and the capacity to expand the facilities. So this was prepared by one of my analysts, that's Max and I, and that's that green energy for all crypto mining. I left it in, I thought it was quite funny. Yeah, that's a picture of me above the lake. What's it called? The Baikal Lake, yeah. And one other aspect in the risk analysis that we've done is that by 2030 we know that data centers are meant to consume 40% of the planet's energy. Yeah? This is it's a massive figure, and this is going to be an issue all over the world. Norway, Sweden, Germany. But the region of Irkutsk itself, why did we spend so much money and why did we make the investment here, is because we think it has the potential to become the green financial data center of the world. There's green energy production, a capacity of 138 terawatt hours per year. If you compare that to Germany, because of course we've been discussing quite a lot with some of the authorities in Germany. Germany only has 220 terawatt hours in total in the entire country produced per year. Yeah. Just to give you an idea of just how important Siberia is as a region. Irkutsk is actually closer to Beijing than it is to Moscow. Yeah. The natural cooling, and the very important thing is that the Siberian local economy has got to improve or grow about 500% before the surplus energy is at risk, which means we've got a long-term stable supply of cheap green energy. And my view, there is no one else globally that can match that. And we have been looking because personally, as an investor, it's always a risk when you're in one location. Yeah. Or one region. We've got multiple locations. The team, the Kintaro Capital team, actually also some of them moonlight as analysts for the Siberian team. So myself, I'm the fund manager and the founder. Archit is the financial analyst. Timothy is the strategy consultant. We've got a data and financial analyst, Kai, a technical analyst, because part of it as well is we just don't manage the facility. We also try and manage the Bitcoin that we produce. So when do we trade the Bitcoin? When do we buy it back, etc.? And we're a little bit bullish at the moment because we predicted the downturn, sold all our holdings and bought them back 5 days later. So we were pretty chuffed with ourselves. And legal's very important. Christian's our legal advisor. He's based in Malta. And one of the things that we do we constantly look at the real architectural blockchain technicals, the chain technicals of the protocol itself. So Darius is our blockchain developer who works for us part-time. He's mostly full-time in Confidio. Yeah, and so that's basically the story that we've got. If you want to hear any more about it, you can contact me. I'm on LinkedIn. So it's Maistry. That's how my surname is spelled. You can contact Malcolm, who's the Chief Marketing Officer of Cyberian. Max is sitting there as well. So if you want to know all about it, you can contact any of us. The main thing is that we really are building this for a long-term, sustainable, growing industry for the future. Thank you very much.
Thank you, Dr. Maistry. Thank you very much. I really like your shoes. They look very comfortable.
Thank you.
Better than mine. Okay, guys, now I think we all need some energy booster. And now we come to the last coffee break for this 2-day summit. Make the most of it. And I'll see you at 4:30. Thank you very much for coming. I'll see you later. Please enjoy a coffee break.